Hello everyone, and welcome to a new video on our channel, where we turn data into visual stories to help you understand financial markets in a clear and simple way. Today, we have an exciting topic: a comparison between the performance of the S&P 500 and the Magnificent Seven of the stock market. Before we begin, I want to remind you that the dynamic chart you are about to see is created from the image displayed on the screen. This process combines historical data with advanced visualization tools to show the evolution of these stocks in an interactive and comprehensible manner. Let's dive in. The S&P 500 is considered the primary barometer of the U.S. stock market and a global benchmark for measuring stock market performance. On the other hand, the Magnificent Seven are a group of tech stocks that have led the market over the last decade. Apple, Microsoft, Amazon, Google, Alphabet, Meta, Facebook, Nvidia, and Tesla. This group has earned the title due to their impressive performance, market capitalization, and dominance in their respective industries. But how different has the performance of these stocks been compared to the S&P 500 index? Today, we'll answer that question through a detailed and visual analysis. To understand the impact of the Magnificent Seven, we need to go back a decade. From 2013 to today, we've seen a massive transformation in the technological and financial landscape. Companies like Apple and Microsoft have gone from being major players to becoming titans that define global trends. At the same time, the S&P 500 has reflected the overall growth of the market, but its dynamism has been largely driven by these same tech companies. As you can see in the dynamic chart, we begin in 2013, when the S&P 500 was composed of a wide variety of sectors. Tech companies already had a considerable weight, but they didn't dominate the index as they do today. Meanwhile, the Magnificent Seven were in a phase of accelerated growth, with Amazon leading e-commerce and Apple revolutionizing the market with the iPhone. By 2018, tech companies represented about 20% of the S&P 500, and the growth of the Magnificent Seven began to significantly influence the index's performance. During this period, Nvidia stood out thanks to the rise of video games and artificial intelligence, while Tesla started capturing global attention with its focus on electric vehicles. The 2020 pandemic marked a turning point. While many companies struggled to survive, the Magnificent Seven thrived. The boom in remote work, e-commerce, and digital entertainment created a perfect environment for their growth. During this period, the S&P 500 rose thanks to the boost from these companies, but the Magnificent Seven posted much greater individual gains. In the chart, you can see how the lines of the Magnificent Seven significantly diverge from the S&P 500. For example, between March and December 2020, the S&P 500 had a return of approximately 60%, while companies like Tesla and Nvidia surpassed 400%. Today, the Magnificent Seven account for approximately 25% of the total market capitalization of the S&P 500. This means the index's performance is heavily influenced by these companies. However, this concentration also poses risks. If one of these companies faces difficulties, it could have a disproportionate impact on the entire index. A key point to consider is risk-adjusted performance. Although the Magnificent Seven have had spectacular returns, they have also experienced greater volatility. For example, Tesla has seen significant drops following its rapid rises, highlighting the importance of diversification and proper risk management. The comparison between the S&P 500 and the Magnificent Seven shows us how a few companies can transform the financial landscape. While the Magnificent Seven have been undisputed leaders, they also represent a concentration of risk. This analysis reminds us of the importance of carefully evaluating our investment decisions and maintaining a long-term perspective. Another relevant aspect is the cultural and technological impact of these companies. Beyond the numbers, Apple, Tesla, and others have defined how we interact with technology, which in turn has created ripple effects in other sectors. This demonstrates that their influence is not only in financial markets but also in our daily lives. Lastly, it's worth mentioning how the advancement of these companies can serve as a model for emerging markets. Their ability to innovate and adapt to change can inspire other regions to develop their own technological titans, potentially shifting the balance of global economic power in the future. In addition to the analysis of historical performance, it's essential to examine the factors that have allowed the Magnificent Seven to stand out so prominently. One of these is their ability to create closed ecosystems. For example, Apple not only sells devices but also connects users with services like iCloud, the App Store, and Apple Music, generating recurring revenue and unique customer loyalty. Similarly, Amazon has established a comprehensive model that includes e-commerce, cloud services, AWS, and a hardware ecosystem. Another point is access to international markets. These companies not only dominate the United States but also have a significant presence in emerging markets. This allows them to diversify their revenue sources and adapt to global trends, mitigating risks associated with relying on a single economic region. On the other hand, monetary policy has also played a crucial role. Low interest rates and financial stimulus programs have fueled the growth of tech stocks, enabling these companies to finance themselves at very low costs to expand their operations and explore new business areas. However, it's important to consider how a change in these conditions could affect their future valuations. Artificial intelligence, AI, has become a key driver for the growth of several of the Magnificent Seven, especially in the case of NVIDIA and Microsoft. NVIDIA, a leader in GPU manufacturing, has experienced a boom due to the growing demand for AI and machine learning processing. Meanwhile, Microsoft has integrated AI into its key products, such as Azure and Office 365, positioning itself as a relevant player in this technological revolution. The implementation of AI not only allows them to optimize their operations but also to open new business lines that generate long-term value. This underscores the importance of investing in innovation as a differentiating factor in highly competitive markets. Looking ahead, the challenge for the Magnificent Seven will be to maintain their dominant position in an environment where competition is constantly evolving. Emerging companies in Asia and Europe are innovating rapidly, and government regulation could intensify, especially on issues like data privacy, antitrust practices, and sustainability. On the other hand, the transition to more sustainable technologies could offer both opportunities and challenges. Tesla, for example, leads the charge in electric vehicles but faces pressure to expand its production capacity efficiently and sustainably. This focus on sustainability also extends to companies like Amazon, which are investing in renewable energy to reduce their carbon footprint. Finally, diversification will be a crucial theme. The Magnificent Seven will have to explore emerging markets and technologies to maintain their relevance, from the metaverse to quantum computing. These areas are still under development but could represent the next big wave of innovation driving their future growth. And before I say goodbye, I want to invite you to watch our next video, where we'll explore why emerging markets could offer better returns in the coming years. Don't miss it! See you in the next visual market analysis. Thanks for joining us, and see you next time.